Good morning, everyone. This is Marshall Gidler bringing you the morning comment for December 11th. The biggest news overnight was that the Reserve Bank of New Zealand went back to a tightening bias. In October, it switched from tightening to neutral, but this time it said that, quote, some further increase in the official cash rate is expected to be required at a later stage. The change sent the Kiwi soaring. The move reaffirms my belief that the New Zealand dollar is likely to be the strongest of the commodity currencies, although it may still lose ground over time against the resurgent dollar if milk prices fall further. Australia's unemployment rate rose slightly in November, but this was actually good news as it indicates that discouraged workers are returning to an improving labor market. Even better, employment jumped by 42,700 or 42,700, almost double last month's 24K. Nonetheless, the Australian dollar was only slightly stronger against the US dollar, perhaps because of the continued decline in commodity prices and in global stocks. I remain much more enthusiastic about the New Zealand dollar than the Australian dollar. The Australian dollar just seems to be at the mercy of global risk appetite. Today is a pretty big day for the markets. The Norges Bank and the Swiss National Bank meet today. Norges Bank left its key policy rate unchanged at its last meeting in October. Yesterday, the country announced a small slowing in CPI inflation in November, bearing in mind also that low oil prices have given rise to uncertainty over the growth outlook. The Norges Bank today could signal a rate cut for early next year. This could prove negative for the Norwegian krone today. As for the Swiss National Bank, after Swiss voters rejected the Save Our Swiss Gold referendum, the bank's most likely to reaffirm the Euro-Swiss floor of 120 and to keep its benchmark interest rate unchanged. A press conference will follow the decision. The main question about Swiss monetary policy is whether they'll institute negative interest rates. So far, the market hasn't challenged the Euro-Swiss floor significantly, and so I think they'll hold fire on such a move until it's absolutely necessary. The ECB will carry out its second targeted long-term refinancing operation today. Expectations range from around 120 billion euros to 180 billion euros. A lower than expected allotment will increase the likelihood of full-fledged quantitative easing and so could be somewhat euro negative. Market expectations aren't very high for the operation, however, so a higher than expected result would probably be a bigger surprise. That would cause some doubt about the likelihood of a QE program and so would probably cause a sharp rise in eurodollar. Also, it's CPI day in Europe today. Sweden's CPI is the inflation figure that will attract most of the attention. The country is expected to have fallen deeper into deflation in November. This could really hit the Swedish krona ahead of next week's Riksbank meeting. Sweden's unemployment rate for November is also coming out and is estimated to have declined. In the U.S., headline retail sales are forecast to have accelerated. However, usually the focus is on retail sales excluding auto and gasoline, which is forecast to show a slowdown. That could weaken the dollar a bit. During the European Day, Bank of England Governor Mark Carney speaks at a news conference in London, and Bank of Canada Governor Poloz will give a speech at the Economic Club of New York. For more information, including technical analysis, please read the full comment on ironfx.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.